Pero bueno, primero, gracias por vuestra flexibilidad hoy. Somos un grupo bastante internacional. Tenemos inglés, francés, israelí, portugués, España, catalán también, y el americano. But we're going to do the rest of the presentation in English, if that's okay with you guys. Thank you very much for the cambio de chip. We were trying to decide beforehand if the audience is going to be more investors or more startups, founders, co-founders. Quick raise of hands. How many founders, co-founders in the room right now? Okay, a few. Investors generally don't like to raise their hands, but thank you very much for doing so. So as investors, we'll gear it more towards that. Why is it that we're investing in tech companies? Why do we do it? It's exciting. We're growing and building this ecosystem. We're contributing to our community. We're helping to build jobs this way. Sometimes we're giving back or recycling back. The reality is the reason that we invest in tech companies is for the return. It's for the money. And how do we realize that return on our investments? 99% of the time it's going to be through some form of M&A, some form of selling the company that we are invested in. And so we'll gear this more towards the investors. At some point, you need to sell these companies. One of the things that we've been talking about recently, before we came up here, was this idea that oftentimes investors are not having these very critical conversations with their investees, with their portfolio companies, before they make the investment. What is your exit strategy? What are the plans for the company 5, 7, 10 years from now? And if you don't have a clear dialogue with your investees as to the nature of your business, but the desire to have them exit in the future, to make all this keep turning, it's critical that we're having those conversations with our portfolio companies. So real quickly, and we'll get into longer format introductions here. I'm Dugan Milne, as I mentioned, American. I head up Borealis Group's tech funding and M&A. I've been working with founders and investors since 2005, helping them grow their companies and helping them find exits with international competitive buyers. We'll go down the line, we'll do intros here. Go ahead, Tom.
Okay, so I'm Tom Uhart. I co-founded a business called Blue Tab Solutions. It's a professional services business, technical consulting company that specializes in data and AI. And I founded the business with another partner, a Spanish guy called José Luis. And we founded the business at the end of 2005, and we sold the business to IBM in 2021. So that's like 19 years ago that we started the business, and we sold it after 16 years. Just a quick introduction.
Can you hear me good? Okay. So this day I'm building my third startup. The first one was 2013 in the cybersecurity space, based in US and Israel. Sold after 4 years pretty much to Symantec, an American company. And I'm going to share mainly the experience from that kind of startup until M&A.
And I'm Roger. I founded an invoicing and pre-accounting solution in Barcelona. That was 2013. And we sold the company 2 years ago to a French group that was owned by a private equity called Providence, which is a pretty big private equity firm based in the US. That's it.
Guys, I heard 19, I heard a few years later, and then I heard something maybe in between. But in terms of timing, how long did it take you to get to the point where and what were the catalysts for the point that you decided it was time to sell, or you realized you wanted to either actively or reactively sell the company? What was your timeline like on that? Did you say 19 years?
So shall I start?
Sure.
Yeah. So we were unusual in the sense that we didn't raise outside cash. We bootstrapped the company. So we grew the business based on revenue from our customers. And think after about 5 years of being in business, we did speak to an M&A company in London, to talk about, we were concerned about valuation. Are we doing things in the right way? That we're actually creating value. Is this something that would potentially be an attractive asset for someone to acquire in the future? But at the time, we weren't particularly looking for an acquirer. We wanted to get, more scale. And then 2012, we did a 4-year plan with this objective of tripling in size, and then we did another 4-year plan starting in 2016. And then 2019, we were sort of sitting down talking about our next 4-year plan, and that's when we realized that we had reached a certain scale. We were international. We had got offices in Spain, Peru, Colombia, Mexico. We had about 700 employees, and we got to the point where tripling in size was going to require some serious financial muscle or some more operational commercial muscle. So we started thinking that it would make sense to look for some kind of partner. We weren't sure if we wanted to look for a private equity partner, a financial muscle, or an industrial buyer. So that's on the professional side. So there were professional reasons why it made sense at that point. There were also personal reasons. We'd built this thing, and we had there's a certain risk. You've got lots of your eggs in one basket. You have spent, in our case, 15, 16 years of our lives building something which potentially has value, but it only has value if you're able to actually realize it. So there was also this idea that we should try to monetize at least some of our investment to date.
And then just briefly, once you got on the track and you decided this is what we're doing, how long was your M&A process from go button until closing?
Okay, so that's a good question. So we decided at the end of 2019, okay, let's go for a transaction. Let's try and find a partner. We were proactive, yeah. We did a dual track process, which means that we were looking for private equities and industrials, so we were open to both. But then COVID hit in March, I think it was 2020, and we put everything on hold because we weren't really, just like everyone, COVID was a frightening thing. We weren't sure if we were going to survive, so we put it all on hold. And actually, in the event, COVID probably helped us with our valuation because we restarted the process in October 2020. So we once we'd realized that COVID wasn't going to kill us, we restarted the process. And it probably, at that point, I think, more value was being placed on resilience, and companies that had been resilient to the pandemic were actually getting better valuations. So possibly, in the event, it wasn't actually a bad thing for us. But yeah, so we had this period of sort of putting everything on hold, but once we kicked off again properly in October 2020, until actually closing the deal was about 8 months.
That's pretty good.
Yeah.
Funding, growth of the company, and then briefly, how long was the M&A process?
Yeah, I think that for any startup, it's very emotional. Like, ideally, internally, you don't want to sell your company very fast, but I think that once you get, unlike Bootstrap, which is an amazing kind of path, I think when you take VC money, you have basically two main components. One is product market fit, fast as possible, and then growth. We managed to have this product market fit very early, but then we failed in a way, I'm saying now retrospect and very honestly, we failed on the growth phase where we didn't manage to grow very quickly and very fast and very good. And so at some point we realized that before B round that we had either to sell the company or it's going to die because it was very hard to raise an additional fund. And in 2018, after 2 rounds, basically almost $10 million that we raised, we had this experience with M&A. We were naive that the first company was going to encounter us with M&A. This is it, we are selling the company, and we ended up like after a couple of weeks of due diligence, it wasn't a good experience. They just rolled back and we almost bankrupt because of this kind of naive mindset. We're lucky to raise an additional extension fund and then to sold the company eventually to Symantec, which is completely good experience. But we almost like, we didn't make it because of lack of experience, I think. And it's like, you're building a company for a couple of years, and then because of lack of experience, you might end up like game over in a way. So luckily, we ended up good.
In our case, everything happened after 8 years of the foundation. So basically, it was a point that we had a decent size, to have this kind of conversation. Otherwise, the valuation doesn't fit the expectations. So, and then the main thing in our case was that we've been able to create some kind of competitive landscape in the market, in the sense that there were many players interested in our space in Spain. So that was a context where, in our case, we deal with invoicing, and electronic invoice is something, here in the Basque Country you have the ticket buy, so very similar. So we had this context in Spain that allows us to create a competitive landscape, which is very important to have a proper process, let's say. But it took 2 years. So in our case, on that moment we were profitable, or we're still profitable. So basically we had no rush to bankrupt, so that helped us a lot to give some perspective, and to be able to choose the right player, or to not choose, which was the case for many offers. So basically it was a long process, 2 years, and especially the last year was very intense. We worked with a M&A boutique that helped us structure the whole thing, and probably the most significant thing was that during these 2 years, but especially the last year, that I've been focused on this process. We could keep growing. That was very important, and this is this focus, during a long process, and yeah, competitive landscape and a decent size was the perfect combinations, and resilience was also relevant on this.
Roger, I wanted to ask you backstage too, but was there a catalyst? Was there a decision made by you, the co-founding team, or did it come from your investors, or did we all agree that the timing was right? You guys took a proactive approach to selling the company, or was there a reaction? You were getting into conversations about it, etc.
So at first thing, my job was to listen to any kind of, even if we are not looking for it, my job is to be open and to have conversations with at the end is with the market and with players all around. So that's the first thing. Second thing is, if there's a good option for the shareholders, I have to share that. At some point, we knew that there was this electronic invoice on the horizon, so the shareholders were not anxious about having a exit super quick and so on. So we've been lucky on this sense, and we had a very supportive board, and this helped a lot.
Yeah.
A lot, and that matters. So basically, they trust me in the sense that and they knew that I wanted to keep working at Kipu, so it was not something that, okay, I want to quit and so on. So in my case, they were very supportive, and I was proactive, saying, oh, look, the market is this, and we announced that, and they were, obviously there was the exit strategy on the horizon, so at some point in 2020, we pictured like a 5-year landscape up to this moment, so we all set up some kind of alignment on this, and they were open, obviously, when we said, look, the market is getting a rising interest in what we are doing in the Spanish ecosystem. We think that it was a good moment because it was this good competitive situation, to have conversation with several players, and it was kind of easy going in this sense.
There's been several consolidation waves in e-invoicing over the years.
Correct.
So you guys got to ride one of those waves.
That was the thing. So for us, we could wait a little bit, and because we were growing quite a lot, better than ever in the last years. So, but we decided that, okay, we have to take this wave, but for the sake of this competitive landscape. And we took a good offer. At the end, we said no for some of them. Filling process in the meantime, so many stories.
You mentioned something there that's actually critical. We spend, as advisors, we spend a lot of our time sort of managing the relationships between the shareholders, the investors, the board, and the co-founders. During the M&A process, everybody's in a pressure cooker of stress, and sometimes there's alignment issues there. And so we're working both sides to make sure everybody stays calm. But it sounds like you had a very good experience in that context. Did everybody here in general have good experiences between shareholders, between board members, investors, etc.? Or did sometimes it get a little bit bumpy?
Shall I start? No, I think we had, it was quite a good. We managed it quite well. In our case, we didn't have investors or a board. We were myself and the other co-founder. We owned the majority share of the business, but then we had another 4 shareholders who we had bought into the business over the years. So there were 6 of us, and we managed it as a project. We brought in an advisor to help us with the process. We kept the communication going. I think we were able to manage it quite well. It gets quite tense at times. You have the deal. I mean, at one point our deal was going to fall through. In fact, there was a point when our deal was off. There was an issue with an American. There was a legal issue with the States, and it was like, okay, the deal's off, and it was months of work. But we managed it. We didn't have any disputes amongst the stakeholders.
I think that there is no right and wrong about selling the company. You talked before that on YouTube, for example. YouTube sold 1 billion, and today with Google it generates 20 billion, I guess, a year. So there is no really right or wrong. It's a little bit combination of best practice, advices, gut feeling, and stuff like that. But in most cases, as far as I can share from other colleagues as well, it can be a game changer for entrepreneurs to sell the companies. In many cases, become very emotional and don't want to get rid of the company you built, you work outright. Our investors weren't the most friendly kind of in this aspect. They wanted to have better returns, so we had this argument. It wasn't the most nicest experience with them, but we managed to convince them. Until I made deal when I didn't know that there is people who are advising on the M&A, who are helping to get through this M&A. I thought that company will reach out and just would acquire you. But getting to know you guys, I now realize that there is this option. Hopefully the next time would be better.
So you talked a little bit about convincing your shareholders on the price, etc. All of you guys went through an earn-out or at least a stay on board for a while period. Can you talk to us, how much of the negotiation was around price, and then how much of it was around structure of the deal, and who's going where, and rights and warranties and reps, etc., etc. Roger, you want to?
So in our case, for good and bad, we had 2 bad experiences, like the deals that seemed to be done and it failed. Yeah. So basically this helped me to create a better context with the final deal. So I started very quick with the valuation, saying, look, I had all the data, so it was kind of easy to have this conversation at first to avoid losing time. So we set up valuation expectations very quick. And then part of the conversation was to aligning on the vision and what was the deal. In my case, I wanted to stay. That was part of I wanted to stay, and keep pushing at least until the electronic invoice context. So, and then negotiation was very, honestly, was very quick and transparent. The whole conversation. So that was I was asking for to be professional and to not lose too many times, in the sense that, okay, I don't have an M&A team that can deal with this kind of thing, so please respect the business on this side. And they understood very well this, and I really valued the professionality, in my case, with the private equity guys, that they are an expert doing this. Yeah. So for good and bad, they are very good doing this. Yeah. And I think that luckily, in general, the terms, all the terms were fair, honestly. So there was not too many back and forth process. So avoiding this kind of extra back and forth. So I appreciate this, honestly, and I think that this helped a lot.
Experienced buyers makes a huge difference in the transaction process. You sometimes start transacting with less experienced buyers, and it shows, you feel it, it hurts, it's a grinding sensation for the founders. But in all of your cases, you guys ended up working with very experienced buyers, and so that's positive.
I think that for cybersecurity and deep tech, the company usually they acquire is like buying the technology, but also the team. Like we were 20 people when they acquire us, and it's not just the technology. So it was a journey of staying there in Symantec like for 3 years at least, and they managed to convince most people because the compensation is very good in terms of equity, and like you can stay there forever, whether it was Symantec or Broadcom afterwards. The compensation is very high, so it can be a very good outcome.
Price versus structure, real quick, how did it go?
So the way I guess this is quite standard. The way that we did it, we had a sort of a bit of a beauty contest. We had quite a lot of interest. We had quite a lot of interested parties, and we gave them a date by which to submit their sort of offers, and it was fairly informal. They had to have some kind of valuation, but they also had to tell us what they were thinking, what they would do with us, whether we would become a business unit within their company, whether we would, what their plans were for us. And we sort of eliminated almost all of them to go into a much more serious and long process, due diligence, with actually just 2 finalists. So it was in that first round where we really talked about all of these things, and it certainly wasn't just about valuation. Valuation was actually quite similar overall.
Yeah.
We had similar valuations.
Yeah.
It was all about, of course, we were concerned about what they were going to do with our employees.
Yeah.
We were concerned about how long the founders would have to stay on board.
Yeah.
All these kind of questions and it enabled us eventually to whittle it down to 2.
No, and the whole point of the question was we generally get to price pretty quickly in these negotiations, and then you just spend an enormous amount of time ironing through different structural elements of the transaction. Just to close out here, you've all sold your companies that you've built. I sort of introduced this theme at the beginning, but I'll throw this piece in there, and then you guys can kind of fill in the rest. I always recommend for early stage entrepreneurs, and especially first-time entrepreneurs, to be thinking about the exit and make it part of the growth plan for the company. And that can be mapping out who this product, this solution, this technology helps sometime in the next 5 years, which sectors could possibly be consolidating on this sector over the next 5, 10 years, etc. What are your 2 cents, 2 bits in terms of early stage entrepreneurs, first-time entrepreneurs? Here's something I wish I knew getting going.
So I think it's important to build something built to last on one side, but on the other side, if you're thinking of some kind of exit strategy, you have to be friendly with the ecosystem and potential buyers, try to find a way to how you can create revenue altogether, how you can integrate with them, how you can give value to the ecosystem. You are competing, but at some point you are complementing, typically, no? With bigger players. So I think to keep this in mind all the time, it's helpful. No?
Yeah.
I think that the biggest company like Facebook and Google didn't build with the VC mindset of let's build to sell very quickly and make it high returns. They built it because they knew there is a big pain and a great opportunity. I think that for most entrepreneurs, it's maybe to get to know faster the VC game and startup game, where it's all about growth. This is what distinguishes between business and a startup in a way. You need to grow very, very fast, otherwise you are not really a startup in a way. It's this is the main differentiator. So the expectation is fast product market fit, fast growth, build to last, but build to sell in terms of you need to envision who can theoretically buy you. If you can't imagine no player in the industry, in your industry that you know very well, and you don't know who can buy you potentially, this is in a way, some sort of red flag, I would say.
Yeah.
Yeah, so very quickly, definitely. I think build to sell, perhaps it sounds a little bit transactional, a little bit cold, but I think actually building to sell is probably the same thing as building to generate value.
Yeah.
You know, and so it's all about building a valuable business. So I think it is very, very useful. It's helpful in terms of creating value for your business to think about making something that is a sellable asset.
And you guys spent a long time planning out that exit strategy and how do we create that last bit of value before we go. Guys, thank you so much for your attention and the cambio de chip. I'm sure we're going to go back to Spanish after this. Any questions you may have? Are we taking questions or no? We are not.
But
Come
we will
find
be,
us
we will be all around.
afterwards.
You
We're
can talk.
easy guys to talk to.
Hemos quedado sin tiempo. No, los últimos no van a tener su propio espacio. En
Vale.
cualquier caso,
Muchísimas gracias.
hago una aclaración. Un momentito. Preguntas aquí no, pero como vais a estar en el networking, ¿verdad? Y estaréis pues por los stands. Si alguien quiere hacer una pregunta, pues ahora cuando se levanten rápidamente, y así conseguimos que las últimas personas que participen en el evento tengan atención, porque si no, son ellos quienes se van a quedar sin su tiempo. Muchas gracias porque han sido muy puntuales.